Yeah, thank you very much, and good afternoon to all participants, and apologies again for the late start. This is a joint report prepared by the two BIS committees, Committee on Payments and Market Infrastructures, CPMI, and the Market Committee. The report sums up the thinking of the central bank community on the implications of issuing a central bank digital currency, CBDC. So that's a new acronym you've got to live with, CBDC, based on studies by the two committees. It's released in time for the discussion that will take place in Buenos Aires next Monday and Tuesday as part of the G20 Ministers and Governors meeting, which among different issues will focus on digital assets and digital currencies. So the report focuses on two main variants, two main possibilities for CBDC. A wholesale CBDC, which would limit access to a predefined group of users, such as financial market professionals or users of a particular financial market infrastructure, and a general purpose CBDC, which would be widely accessible to the general public. And the report looks at the potential effects of these two archetypes in three core central banking areas: payments, monetary policy, and financial stability. So let me focus on wholesale payments, which have been the focus of my committee, the CPMI. Wholesale, that is bank-to-bank payments, are an area of potential promise for CBDCs, where central bank digital currency could improve the speed and efficiency of securities settlement and FX settlement. But we very much believe that further work is needed to see if there are really benefits here. The advantages of a general purpose CBDC for payments are quite limited because we believe that fast payments, even instant payments, and efficient private payment solutions are already in place or being developed that can deliver most of the advantages that are expected from digital currencies. And in fact, we believe that the best way for central banks to take up the challenge of digital currencies is to step up our efforts to make our payment systems faster and to make them cheaper, including on a cross-border basis. And I would like to flag another CPMI report, which was published 3 weeks ago on cross-border retail payments, which addresses exactly that dimension. I think I've been long enough, and I can give the floor to Jacqueline.
So good afternoon as well to all participants. So to follow on with the other core areas, introducing a CBDC would not alter the basic mechanics of how monetary policy is implemented. So in this section, I'll speak very briefly on the impact on monetary policy. While we think it would not alter the basic mechanics of how monetary policy is implemented, there could be significant impacts on banking activity, as well as the structure and functioning of financial markets. Moreover, while CBDC could appear to enrich the central bank's monetary toolkit, for example, by strengthening the pass-through of the policy rate to market rates, and possibly address the limits of the zero interest rate bound, other more conventional tools can do the same without introducing new risks and challenges. So on the financial stability aspects, a general purpose CBDC could have wide-ranging implications for banks and the financial system. Commercial banks' reliance on customer deposits may become less stable, as deposits could more easily take flight to the CBDC in times of stress. And the consequences for financial stability and the efficiency of the financial system need to be carefully weighed. These are all elaborated on in the report. So overall, the conclusion of the report is that any steps towards the possible launch of a CBDC should be subject to careful and thorough consideration. So each jurisdiction will have to make its own assessment, taking into account the specific operating environment. So I think I will stop here. And pass the floor back to the moderator. Thank you.
Thank you very much. So that sums up the introductory remarks from the chairs. Let me just one more time remind you that this teleconference is under embargo. It's on the record, but it's under embargo until 2100 hours Central European time. That's in a little under 8 hours from now. Let's move to the question and answer part of this teleconference. May I ask the teleconference operator to give us the first question, please?
The first question is from Nangyal Sering from MLEX. Please go ahead.
Hello, this is Sering from Hong Kong. I have a question. The first, two questions. The first one is, are we saying here that the risk of central bank digital currencies, all things considered, outweighs its benefit at this stage? That's my first question.
Thank you for that question. It's a little bit of a bad line, but let me see if anybody wants to go ahead and answer it.
Maybe I could take this question. Essentially, the report has articulated that the decision to issue a CBDC will differ country to country. So central banks have tended to limit access to digital account-based forms of central bank money to banks, while making sure that physical cash is widely accessible. This approach has served us well, and this sets a high bar for changing the structure. In jurisdictions where cash, for example, is rapidly disappearing, there may be stronger reasons to consider the issuance of CBDC to the general public as an alternative, safe, robust payment instrument. As I highlighted earlier, CBDC could appear to widen the monetary policy toolkit. However, the current pass-through seems adequate for now. On the other hand, there are risks that we do not fully understand at this point. As I highlighted earlier, and as you can read in the report, there is the potential for financial stability risks in periods of stress due to a flight towards CBDC. There could be higher instability of commercial bank deposit funding and potential implications on banks' business models, as the report highlights as well. Therefore, any step towards a possible launch of a CBDC should be subject to careful and thorough consideration, and central banks will need to weigh the benefits of issuing CBDC against the potential risks. And further, research on the possible risks and structural changes arising from CBDC would be necessary. Thank you.
Yeah, if I may, just to complement what Jacqueline just said, as Jacqueline rightly said, there are different approaches, and there will be different approaches to general purpose CBDC. If only, but not only, but in particular because the demand for cash is evolving in different ways across countries, and we are faced with very different situations here. When it comes to wholesale CBDC, that is central bank money, which would be used in financial market infrastructures or payment systems, bank to bank, there is less concern in the sense that it is accepted throughout the central banking community that this is a future towards which we're heading, having in particular blockchain-based FMIs or blockchain-based payment systems that will develop. And we have to look seriously into how to whether and how these infrastructures and these payment systems would be connected to central bank money. So there are nuances here. There is much more caution and concern with retail CBDC than with wholesale CBDC.
The next question is from Frank Siebel from Reuters. Please go ahead.
Yes, hello, thank you. One question. You write in your report that introducing CBDC could result in a wider presence of central banks in the financial systems, which, of course, could mean a greater role for central banks in allocating economic resources. You're right. My question is, will this have effects on the mandate of central banks? Is there some kind of a legal aspect connected with it that you have to look at the mandate again if, for example, the greater role in financial systems is not backed up by the current mandates?
Thank you. May I turn that over to Mr. Cœuré or Ms. Lowe?
I would jump in to highlight that on this particular issue, it really would depend from central bank to central bank, because mandates could differ across central banks on these particular issues that you have highlighted.
But I don't see a priori a reason why the development of CBDC would have to change our mandates. Our mandates are given by the people in our countries, and they have to be robust to development in the financial system. So it may change the way we deliver on our mandate, but I don't see a reason why the mandate itself would have to change.
Many thanks. Could I ask
Thank you.
Next question, please? And could I remind everybody that it's *1 to get into the question queue?
The next question is from Gregor Hunter from Wall Street Journal. Please go ahead.
Hello. I had two questions. The first is, what consideration did the committee give to the launch of a CBDC on existing private digital tokens, such as Bitcoin, Ethereum, and others?
Let me turn that over to the committee chairs, please.
I think these are really quite separate issues. We would look at it the other way. Really, what is the motivation of this particular study? I would say it's a fewfold. I think certainly technological advances in the area of payments. I think in some jurisdiction, reducing use of cash. And thirdly, the whole advent and increased interest in cryptocurrencies or crypto assets, as you might call them, and other blockchain-based digital tokens. I think these three particular aspects and developments have generated increased interest in whether central banks would soon be issuing their digital currencies. And these trends and the discussion that this has sparked has in turn, I think, spurred the two committees to put this report together to set the scene for this important debate on central bank digital currencies.
Many thanks. Let me ask for the next question, please.
The next question is from Neil Beerman from Business Times Singapore. Please go ahead.
Yes, several central banks, including the Monetary Authority of Singapore, have done trials on whether these digital currencies could be implemented by central banks. Are there any central banks that have actually implemented them?
Many thanks. Let me turn that over to the chairs, the committee chairs.
So in MES's case, and I would suggest if there's specific questions on MES's experiments, you could direct those questions to our press office. But more generally, for MES, we have experimented with central bank digital currencies in the wholesale space, the issue that Benoît had highlighted. That will be processed even, yeah.
No, I'm talking about not only the MAS, I'm talking about other central banks. Have they actually conducted actual trials rather than just looked into it or actually issued any of these digital currencies?
No, so far what is being reflected upon by central banks is more about the technology, the possibilities offered by the underlying technology. So there is a lot going on in central banks on using blockchains for different purposes. And then some other central banks, which are the most faced with the decline in the demand for cash, they are reflecting on that, but to my knowledge, there is no central bank which has actually issued a CBDC for all the reasons which are explained in the report, because there is careful consideration to be given to also to possible impact on financial structures and possible risks to financial stability. So far, it's a discussion we're having, but I'm not aware of any practical examples so far.
Thank you. Thank you.
Thank you. May I ask for the next question, please?
The next question is from Stephanie Lienhardt from The Banker. Please go ahead.
Hello. Thank you very much. You mentioned the aspect of the risk to financial stability of issuing wholesale central bank digital currencies as as one of the potential conditions of financial stress, there could be an outflow of funds from commercial banks and in favour of the central bank digital currency. Now, if the approach was different, if the approach was value rather than register based, and the digital central bank money would be distributed through the commercial banks, and the money being held in a digital wallet like cash would be, rather than in an account with the central bank, would this not change the risk? Would that not erase the risk of financial stability?
Many thanks. Let me turn that over to the committee chairs.
I think the example you will be perhaps alluding to will be soft wallets that commercial banks, I would say, have introduced and are increasingly introducing. In this case, I think the liability would still be with the commercial bank. So it won't introduce some new financial stability risks if these wallets are issued by commercial banks, and I think we've seen quite a lot of them proliferating. I think the financial stability risks would arise if central bank digital currencies, general purpose digital currencies, are issued by the central bank and is a liability of the central bank.
Many thanks. I'll ask the next question, please.
The next question is from Hugh Jones from Reuters. Please go ahead.
Yeah, hi. It's about really the G20 meeting next week. From reading your report today, it looks like a fairly slow, cautious approach. Then on the other hand, we have demands, France and Germany, for regulation of the private side of Bitcoin, of digital currencies. Did you see like a twin track approach emerging here, a more slow, cautious by the central banks, and a push for regulation of the, much faster of the private side?
Let me give it a try. That's a very good question. That's not what the report is about. As you know, the report is about CBDC, and we're not discussing the pros and cons and the regulation of Bitcoin or other private digital tokens. That will be discussed in the FSB in the G20 meeting next week, based on the usual report by the FSB chair. So I guess we'll leave it to Mark Carney to introduce that discussion ahead of the G20 meeting. My personal comment here is that there is a lot of, it's clearly a learning curve, and regulators across the world have addressed what are the immediate risks created by private digital tokens or crypto assets. And immediate risks are related to investor protection on the one hand, and on the other hand, they are related to anti-money laundering and terrorism financing. And so that's the battle line, if you want. That's the immediate concern that regulators across the world have. And they are talking to each other, comparing experiences on how to best do it, in particular when it comes to investor protection. The next discussions on regulating the future markets, regulating the underlying markets, etc., that will come, but the priority really has been about investor protection and about money laundering. So any discussion in the G20 next week will be likely to be forward-looking, discussing the pros and cons of regulation, but don't expect concrete action. It's more about comparing experiences so far. But that's a personal comment. It's not in the report.
Thank you.
Many thanks. May I ask for the next question, please?
The next question is from Claire Jones from Financial Times. Please go ahead.
So my question involves one of the issues that you touch on in the executive summary about the risk to financial stability, namely that if this is a general purpose central bank digital currency that's widely available, that in periods of financial stress there could be a flight to safety that's quite damaging to the commercial banks. You also make the point that this could have quite severe cross-border implications if it's for currencies that are widely used for cross-border transactions, that there could be a generalized flight to safety across borders. Now, that seems to conflict slightly with the message on the call, which seems to be that this is an issue that has to be decided on a national basis. So, I mean, would it be possible to get some clarity on what exactly you mean by widely used? Are we talking about the kind of top 5 currencies that are widely used, or are we talking about something much bigger than that? And could we get to a point where those central banks that issue those widely used currencies will come up with some sort of accord to agree that they would not produce a digital currency that would be widely publicly available?
Many thanks. Let's turn that over to the chairs.
I would comment just on your first question on what is a general purpose digital currency. I think it is one that will be widely available to consumers and to retail, which would be the sort of non-wholesale aspects of the ecosystem. So be retail, consumers. That we would consider to be a widely available general purpose, a consumer-oriented digital currency, if I could describe it in those aspects. And you're right that I think, as we had highlighted in this report and in our earlier comments, I think the circumstances of each jurisdiction would be quite different. And sort of rounding back to a question earlier on whether or not there could be impacts on mandates, we note as well that in some jurisdictions, central banks may also lack the legal authority to issue central bank digital currency, and ensuring robust design and operation of such a system could prove to be challenging. So I think there are specific country and jurisdiction issues that need to be considered. But I think this is an area where central banks can indeed maintain an open dialogue, learn and understand together with each other. So this Joint Market Committee CPMI report is really a good example of central banks working together to forge a common view towards emerging areas such as central bank digital currencies. But I think ultimately the decision to issue or not would really rest on a national basis, taking into account specific operating environments in each country. But certainly central bank dialogue, central bank research and understanding of these issues, identification of the common risks that we share or envisage, and to think about ways to understand these risks and assess and measure the financial stability risk that this could potentially pose. I think these are all areas that central banks are studying together.
Maybe to support and complement what Jacqueline just said. Clearly, the drivers of the decision to issue a CBDC will be national. Demand for cash is different across countries. Some of the trade-offs which are explained in the report have dimensions which are fundamentally national, like the demand for privacy can be very different across countries. It's all about sovereignty, monetary sovereignty. It has to be national. But the mere existence of the report we are discussing today speaks to the fact that central banks are mindful of the global consequences and they are mindful of the need to cooperate. So it's not different in that sense from any monetary discussion, where we always are sovereign. We report to our constituencies, our parliaments, but we know that we have to discuss it internationally because we are mindful of the spillovers, we are mindful of the global consequences. And the emerging discussion on CBDC in that sense is not different from any monetary discussion.
Many thanks for the question. May I ask for the next one, please?
The next question is from Brandon Tanota from Singapore News. Please go ahead.
Hi. I just want to ask a quick question. Is the fact like the risk of a bank run is it prevalent, like with the issuance of digital currencies for banks?
Can I just please could I just interrupt? I'm sorry, but the line is extremely bad. May I invite you to dial in again, perhaps from a landline or something like that, but it's very hard to hear the question. I'm sorry. perhaps we could come back to you later. Otherwise, I will ask our conference organizer to pass us on to the next question in the list.
The next question is a follow-up question from Nangyal Tsering from MLX. Please go ahead.
Yes, hello. Thank you very much. I just want to ask you, it seems a lot of this discussion would not be possible without the so-called distributed ledger or the blockchain technology. And I read something in the report that says that actually the technology itself is still, not really mature, and there isn't a really lot of real-world applications, even in the private sector. Have you sort of really thought about this technology and whether this can, if you really want, can actually underpin or actually create this sort of the central bank digital currency? Thank you very much.
Well, one short answer is that DLT, digital ledger technology, is where the action is. So that's where we focused our study. And indeed, the DLT-based technologies are not yet fast enough and scalable enough to provide the kind of broad-based payment system or broad-based currency function that you would expect from a currency. But it's not only about DLTs. One option which is being discussed in the report is opening central bank accounts to all citizens, which is something that creates lots of issues and certainly is not something that central banks would favor at the current juncture. But that's a possibility which does not require DLT. So the discussion is mainly about DLT, I would say, but not necessarily entirely about DLT, because there are alternatives, like opening accounts to all citizens, which creates different kind of issues.